Good morning, everybody, and welcome back to this week's edition of the Wilton Report, Princeton's only dedicated podcast / videocast, really just talking about the real estate market. So today, we're going to really get granular on the rental market first quarter. It's kind of for a landlords, but if you're a tenant and you're watching this, great. If you're a homeowner and thinking about being an investor, this is a great episode. And for the landlord investors, just as a reminder, we do have Princeton Property Management Services.com out there just waiting to manage your property so you can just go off and do yoga and all the other things that you do being a landlord. Okay. Love talking about headlines. I think I'm going to start every Wilton Report just talking about real estate headlines because it's just so much. There's so much that happens and it's so impactful. Because either you rent a home or you live in a home. Obviously, there's people who are less fortunate that do not, but the aspiration is to get them into a home. So like real estate is very primal. It's very emotional, right? It's all around us. So obviously it's a topic du jour daily on the news. So I will go back to, I have to find the Wilton Report that I did where I said, I don't think we're going to have lower interest rates in 2024. I did state that. I think I was at the end of the year, beginning of the year podcast where I sort of did the 2024 forecast. I said, we're just kind of going to be where we are. And I said, don't date the rate and, marry the house. It's kind of like plan on the rate being the rate. So here we are, March's jobs report. It was something to the tune of 300,000 jobs, which is very high. It was beat expectations again. And then all of a sudden, miraculously, the Fed said, yeah, we're probably not going to lower rates anytime soon. So, the stock markets and the equity markets have not reacted well to that. But I don't know. I'm just the low man on the totem pole here, but I just didn't see, at least as it correlated to the local markets and the stuff that I look at, lower interest rates for 2024. So it's going to take longer than expected to win the war against inflation. So what does that mean? Rates are the rates. Interestingly, in Princeton, again, if you think that means housing prices are coming down, you're wrong. 51% of the market is cash. I was sent this headline yesterday. You can see it right from the screen grab. I did a very poor job editing it. I don't care. It's my podcast, and I did a bad job of editing it. The headline is, buyers are back in control as luxury home sellers / prices. Okay. And that was sent to me by my buddy, Parker. So John and Lori Hunter are gearing up to relist their Phoenix home for $8.7 million. Okay. Couple things wrong with this photo. All that green grass in Phoenix, I don't know. Phoenix is a freaking desert, so maybe that's a problem. But $8.7 million, that is not the market here in Princeton. The luxury market in Princeton is really $2 to $4 million, depending on the neighborhood. There is inventory growth in there, but we're still seeing bidding wars in that market. So it's not quite applicable. This is from Lance Lambert at ResiClub.com. If you don't follow him on Twitter or LinkedIn, you should. And if you look in the upper left corner of this, it shows you where he has home price growth from 23 to 24. Blue and to dark blue is 10% or higher. Basically, all of New Jersey is dark blue except for the bottom counties, and I don't mean this negatively, like Gloucester County, et cetera, and southern New Jersey. Why? Because they're the furthest away from job points. So you look at Texas, a lot of red, Northern California, red, San Diego, 10% growth. So the Dakotas, a lot of red. I don't know why. I don't follow that market. Not that I don't care, but it doesn't matter. For the most part, you've seen price growth. Alaska, middle. So then Zillow, which it's everybody's favorite search engine, said home prices. So 2 headlines ago, buyers are back in control, right? Wait a minute. Home price growth is good. And then Zillow came out and said, oh yeah, by the way, home prices are going up 1.4% nationally, but please look at the national home price, $350,000. Now, in 2021, it was $290,000. So, please don't misunderstand. This is not the Middle Atlantic market. This doesn't even That's a studio in Princeton, $350,000. That needs updating. So it's all relative, but that being said, Zillow is predicting growth. So which is it? I will tell you, in Princeton, prices are still going up in surrounding towns. Why? 27 offers, 41 offers, 12 offers, 7 offers. This is just this week, right? On inventory locally, South Brunswick, Princeton, West Windsor. I think West Windsor had a house that came on under $1 million. I believe it had in excess of 30 offers. So, okay, why? Jobs. It's jobs, jobs, jobs. So if you have an opinion about the market, this is my weekly reminder that the market doesn't care. The market is the market. The numbers are the numbers. What's happening in Phoenix in the super luxe market has no impact in Princeton. So that being said, will a shift come? I have no idea. We'll see. We'll just keep tracking it. The function of the Wilton report is to tell you what's happening today, how to buy a house today, how to sell a house today, how to buy an investment property today, not in 10 years. So that's just sort of the function of why we're here. So 2024 first quarter rental market recap. It couldn't be less exciting data if I try. But here we go. I do get a lot of feedback from landlords that they enjoy it. They find it helpful. So we're going to kind of cruise through it. The one thing I'll say is like sparse, right? Not a lot of activity, not a lot of rentals hit the market. I think a lot of people are locked into longer term rentals. So back in 2018, in the first quarter, by the way, this is first quarter data only, there were 32 rentals closed. Fast forward to 2024, we're down to 18. Peak 2020, COVID, everybody exiting the city. So look at the average pricing for rentals. In 2018, $34.97, $34.48 in 2019. Boom, 2020, $5,005. Massive jump. Why? COVID. People living in the city, people wanting to get more space, et cetera, et cetera. Boom. I don't want to say COVID ended in 2021 because that's a misstatement. $35.99, $38.81. Now we're back on a normal level of appreciation for rentals. $47.71, $43.28 first quarter this year. The list to sale price ratio, landlords are still controlling the market. So what does that mean? They're getting 99.6% of their asking price across the board. And what's even more interesting is that it's only taking 35 days on average to rent something. Now, there are homes that have been on the market for rent for like a year and then they close. So that 35 is really, really low. So if the house that you like comes on for rent and you don't go see it in the first 5 days, I'm going to say you're probably going to lose it. And again, if you look at the list sale price ratio in 2020, landlords got 152% of their asking price. That was just the COVID effect, people leaving the city, et cetera. Right now it's 99.6. So if you're a tenant and you want to negotiate with a landlord, the math is telling you not to. If you have an opinion otherwise, the market doesn't care. So looking at by bedroom count, because I think it's important to break the market down in the rental market a few ways, just like the retail market. One bedroom units, the average rental price was $26.83. 100% of the asking price, 49 days on the market. 2 bedroom units, there were 6 of them, $29.67. So you can see not like a huge jump, right? So pretty profitable to have a 1 bedroom as a landlord. 3 bedrooms, $5,000. 4 bedrooms, $6,250. 5 bedrooms, $6,700. But obviously at that point you're paying high property taxes, et cetera, et cetera. So, you can see, I think if you ask where the sweet spot is in Princeton is to have a 1 bedroom downtown in a condo building, you're getting peak rent and probably mitigating your expense because it's a condo unit. So just word to the wise on that. So looking at single families, there was not a lot in the first quarter. It's actually, I don't want to say alarming. Obviously, no 1 bedroom single families, though every once in a while they pop in, or studios. There 2 bedrooms, it was $25.67 was the average renting price for a 2 bedroom single family. 28 days on the market. 3 bedrooms, $44.50. 67 days on the market. 5 bedrooms, $66.50. 31 days on the market. But interestingly, the landlords got 100.8% of the asking price because, if you're a family of 5, are you squeezing into a 3-bedroom or are you trying to squish into the 5-bedroom? It looks like people are looking at the 5-bedroom. So they're renting twice as fast and landlords are commanding a higher percentage of their asking price. So again, from a tenant perspective, that's sort of where you have to be in the bid box. And from a landlord perspective, that's sort of your rental marker in terms of price and what you can expect back. When you look at the condo townhouses, and again, condo townhouses from an investment perspective are good because you have the HOA, but you don't have those big one-off expenses. So the 1-bedrooms are $26.83, 49 days in the market. 2 bedrooms, $33.67, 20 days on the market, 100.6% of the asking price. So you can see, obviously, there's a demand for 2 bedrooms. Why? Space. 3 bedrooms, $55.50, 43 days on the market. 4 bedrooms, $62.50, 22 days on the market, 100% of the asking price. So really, I saw an article the other day, and I couldn't find it again, that single-family rentals would become it's the new first-time home buyer home, right? And that's sort of playing out when you look at the numbers of like 22 days on the market. It's fast for the rental market, 100% of the asking price. So it just shows you that tenants are willing to pay to get a home for their families in the town that they want to live in. It just is what it is. And here's the thing too, like this isn't about landlords being right or wrong or tenants, whatever. This is the market. This is the math of the market. So looking at what's available in Princeton this morning, I pulled it this morning. So there are only 2 3-bedrooms for rent right now. One is $4,500. It's on Mount Lucas. It's a single family house, right? One is a townhouse at Stonewall Circle for $5,200. Neither are particularly walk to town. 28 Bank Street, which is downtown, about 4 houses from Nassau Street. It's a 2-bedroom. They're asking $6,500. So location matters. The closer to the downtown you are, the closer to the campus you are, closer to jobs, employment, graduate school, transportation, all of those things that matter, the higher rent you're going to get. 76 Stetson's asking $10,000 a month. 300 Lambert, $10,000 a month. We'll see. That's a lot for rent, regardless of the location. So, that's the recap of the 2024 rental market in the first quarter. It is thin. There's not a lot of inventory. It is renting very statistically fast. You can see by the screen in front of you, there is not a lot. There's 1 4-bedroom. That's it. And it's for $8,500 a month. So rental prices are at a premium. Now, coupled into this, you have the Avalons, as I like to say. You have the one on Witherspoon Street. You have the one at Thanet Circle. And then you have 2 rental communities coming on the market at the shopping center. The prices there, in hindsight, I should have included it this morning. I'll do it on another broadcast so you can see it, or you can just go to the website to check it out. The prices there are really high, like makes the rest of the market look cheap. Minimal space, good locations, but man, like not cheap. So well maintained though. I have to give credit where credit is due. So that is it. That is the Wilton report for this week. We just wanted to take a quick look at rental and rental pricing and rental trends. Overall, still a good time to be a landlord, still a tough time to be a tenant. And we will kind of pick up in about a week or 2 with the next episode of the Wilton Report. Thank you for tuning in. Any questions, obviously, please feel free to shoot me a text or message me on social media. Thanks, everybody.